Hello, everyone, and thanks for joining. We are very excited to welcome today the Cannabist Company's CEO, David Hart, and President, Jesse Channon, for a look into the company, as well as get a general kind of temperature check on the larger cannabis space. There's always a ton going on. I know we talk about it all the time. Cannabis is never boring. There's always something to talk about. But appreciate you guys both taking the time to sit down and chat. So thanks so much.
Thank you,
Thanks for having us.
Of course. All right. So I figured, I know you get this a ton in general, but I thought we would start with the fact that you guys are both embracing new roles, and especially because it's your first time on, would love to kind of take some time to talk through, how this first half of this year in your new roles have been, and how it's been going so far. Maybe starting with you, David.
Sure. So Jesse and I stepped into these roles in January, sort of partway through. And so since then, we've taken a look at the business. I think we've talked to everybody throughout the company. We've talked to investors. We've talked to all the stakeholders, all the major stakeholders. And I think we've identified, which we've talked about before previously on quarterly releases, we're building a better business, right? And so this is really phase 3 in the evolution of the company. Phase 1 was creating optionality, planting flags. We're really good at the RFP process. We made acquisitions either to expand footprint or to get into new states. Phase 2 was potentially partnering with another MSO, right? That took about 16 to 17 months. Ultimately, we ended up parting ways. And so phase 3 is really looking at the portfolio that we have and the company we've built, the assets, and finding ways to make a better business. And that there's a few levers there that I think we've acknowledged we're executing against. One is we're looking at the footprint across the country. We used to be in 17 markets and now we're in 15. And so we're eyes wide open that if we have underperforming assets or markets, we're going to take a deep dive and look to see what objectively we can do with that market relative to the competition and what the opportunities are and the ROIs of spending our time and our capital into different markets. And so leaning into what's working and where the growth opportunities are is definitely a priority. I'll let Jesse speak to what we identified in the wholesale business over the last year and a half, and what we started to execute sort of the end of last year, but really dove in starting in Q1 of this year to building a better wholesale business. So I'll let him speak to that. And then ultimately, it's just across the board being more efficient with our business. And so when we exited 2 markets earlier, which were Utah and Missouri, we reduced part of the overall business from a headcount perspective because you have fewer facilities, you have fewer employees, you have fewer tax ID entities, et cetera. So we're finding ways to run a more efficient business going forward. And that goes hand in hand with looking at the geographic footprint. There's a number of things outside of wholesale, just in terms of incremental canopy usage. We did turn canopy off about 1.5 years ago. We've started to turn that back on. You saw the results in Q1 where we actually had a bit more utilization, which was less of a drag from a gross margin perspective. There's still more to go get, but the wholesale is part of the story there for us to put incremental plants under lights and ultimately have a better gross margin profile. But I'll pause there. I'll let Jesse speak to perhaps some of the wholesale activity that he's put in place since January.
Yeah, no, I mean, look, it's been a whirlwind, right? Like we always joke around. I think, we've been in these roles for just over 100 some odd days. Lots to do, never enough time. So I think right now is just a really strong exercise in prioritization, right? It's, we sort of have the blessing and the curse of there are a lot of things that coming out of the Cresco transaction, which, David has said many times before, is a period that was really sort of hallmarked by a do no harm mentality, right? You're trying to be the best partner possible in ensuring the smoothest and sort of cleanest combination of 2 really complex supply chains and 2 really sort of nuanced companies. You come out of that, now you're standing alone and you're thinking about what does the future look like as a standalone business. You're not necessarily flat-footed because you understand the opportunities and the weaknesses really well. That leads to, this really long list of things that you'd love to do and that you'd love to sort of attack, wholesale business being one of them, right? But it also leads to an incredible exercise in prioritization. You can't do everything at once. You have to sort of create some level of order to the chaos and really start to think about in what order are we achieving those things. So I think we're right in the middle of getting through an initial list, right, of prioritization that as we move throughout this year, David has said this before publicly, we exit the year as a fundamentally different business than we came into it. And I think that is, you're starting to see, we're trying to do the best that we can to be very transparent and to provide those sort of stepstones along that journey so that as we hit those milestones and as we ultimately exit the year, nothing is a surprise, right? Like we've said that we're approaching everything eyes wide open. Wholesale is a great example. Everything's about a better business, not a bigger business. So when you scrape that down to the foundation, you say we're no longer going to prioritize or sort of partake in these low margin bulk clearing exercises. And instead, we're going to lean into finished goods. We're going to lean into first party. We're going to lean into these third party partnerships that help us increase utilization and throughput throughout the footprint in these facilities. We're really going to focus on getting these finished and branded products into our four walls, but more importantly, onto shelves of new partners throughout these markets. That's a fundamental shift. Like you really are going from being an order taker of excess inventory that's like, well, we don't know what to do with it. Do you guys want it? To now commercializing that and saying this is the value proposition. This is what it is that we're providing to both you and then by extension to the consumer. It's a massive cultural shift. It's a big shift in the supply chain in the back of house, which we're incredibly lucky to have a really talented team on both sides that have been able to execute against that. But it's early. I mean, we're 100 some odd days into making these changes. It takes time for that to flow through. But I think we're excited by what we see. I mean, the green shoots in the wholesale business, the green shoots across, multiple states on the retail side, what we're seeing in a lift of finished goods and branded, both in first and third party. These are all incredibly encouraging things. And I think ultimately bring us to a place where we look much more consistent with some of the really well-run and highly valued companies in the space. And so we're laser focused on achieving that through the end of the year.
Yeah, so great time to really kind of take stock and overhaul where needed and have that clear vision and focus to kind of get that achieved, which makes sense. I know you guys have both been with the company for a good time now, so you're very familiar with how everything works and what needs to change and how and when. Was just wondering in terms of like the new role component, were there any pieces of advice that, David, you got from the previous CEO that was helpful, or Jesse, that you got even from David in terms of how to embrace the roles that you're in? I know, again, you're in the company for a long time, so I know you know it, but is there any shades of difference or advice that you've gotten in terms of your specific roles?
Yeah, I think one piece of advice that I received was to make sure that as leaders of the company going forward, we made it very clear where we're going and why. So it's not just what we need to do, but it's why and how we think we can get there. And so, I find myself repeating myself not only externally, but internally on basically every call or every email. You just have to make sure everybody understands where we're going and why. And I think that gives people, at the end of the day, we're still a very large business from a footprint perspective. We've got over 2,200 employees. We've got a lot of people that want to win and want to move forward. Letting them know where we're going so that they can make their own individual decisions that become more aligned with where we're going is the number one thing I think I spend most of my time doing, is making sure everybody is understanding where we're going. And so repeating the fact that we are going to look different by the end of the year and what that actually means internally. And again, as Jesse said, we'll continue to give more information externally as we make the progress throughout the year, but making sure everybody feels when they are executing against their daily, weekly, monthly activities, that they stop and they take a look and they say, am I moving the ball down the field towards where we need to go? If not, let's stop. Let's ask the question of what we're doing. So I think there's been a lot of activity that has continued heading into this year because it was the way we always did things, right? And that's a consequence of how quickly we grew organically. We were very good at winning licenses, building facilities, turning on lights, getting plants on shelf, and executing in emerging markets. You need a different playbook when you're in either, the West Coast sort of more advanced adult use markets, or not every market looks the same, but what's coming to the East Coast as these markets go through their transition. So I think that's really been one thing that I got as an input stepping into the role that I've really seen actually be effective when we're just sort of over communicating and saying the same thing and being consistent with the messaging. I don't know, Jesse, what your thoughts on, but that's one piece of advice that's really hit home with me.
That's good.
So David will get super uncomfortable if I say that he gave me any advice, but he did. So literally the first night that we stepped into this, David called me and he was like, look, greatest strengths can be greatest weaknesses. We're coming at this from the inside. We have to challenge ourselves to balance that with almost looking at this as if we were coming from the outside. If we were recruited from the outside and reviewing objectively the things that we're doing today and really challenging the status quo. So just because we've done this doesn't mean it's what we need to do moving forward. And we really have to sort of start to understand the areas that if we were coming at this fresh, recruited from the outside, and we were looking at this portfolio and we're looking at this business, and we keep telling everybody we're going to make a better business. What does that mean? Like if you could challenge everything, what are the things that you challenge right away? And I think that's how we sort of established what that prioritization for executions needed to look like in the first 180, first 300 days of this role, right? And so that was David's sort of flag that he planted right away. It was, it's great that we know this business from the inside. There's a lot of strength in that. That's not the only way that we're going to look at this. We have to balance it with an objective view as not pitching our own book and not looking at this as if it was, our own. We're coming into it new. David went on a listening tour and sort of spoke with as many people as he possibly could and just tried to ask them questions that would put people in a position where they just provided really candid feedback at all different levels of the organization. So I think those things are the way that we approached it. And I think we tried to offset this idea of like, yeah, we've both been here for a while and we just went through a do no harm phase with Cresco. Coming into these roles, though, we are absolutely going to approach this in a way where we're not afraid to do the things that have to be done and the things that are ultimately going to build a better business.
Yeah, I feel like that's how you evolve ultimately, as being able to let go of the things that aren't serving you anymore or aren't helping the business kind of move forward. So that's great that you guys are both able to share that approach and kind of mindset and vision. And I think that's what really moves the company ahead, which is great. All right, well then I do want to dig down more into strategy, because I think you guys did a great job of laying out kind of what you are thinking about for this year and kind of going beyond that. Would you want to talk very briefly about how maybe everything that's going on kind of the outside affects your strategy in terms of like DEA, rescheduling stuff? I know, again, nothing is guaranteed, but we're on that road. Would love to hear just kind of how that comes into play with strategy in general, or does it?
Yeah, so I'll kick it off. I would say there's enough for us to do internally to create value in this business that arguably we do pay attention to it. We obviously think that there are really positive outcomes for the industry, both in the immediate term being this year, hopefully, and then beyond. Like, those are structural changes that just need to happen. Jesse's highlighted that it does potentially open up the market to have an expansion of the TAM. The number and the types of people that will be coming through our doors post rescheduling will likely be an improvement in the opportunity, the expansion of the market, which is great. But frankly, internally, there's enough for us to do that those are just wins that are going to be helpful to everybody. They'll clearly be helpful for us. I think we definitely have torque to the upside to it. But I think the mantra we have as a management team, or at least that I've tried to convey to everybody, is we need to focus on what we have to do with the company that we have. We have a huge asset base. We have the ability to craft something that I think is better than what we had a year ago. And that's regardless of what the federal landscape looks like. We know what we need to do. I think that's a great position for us to be in, because we can actually control it. We can actually deliver results by making the improvements we need to. Change management, I'm not trying to downplay it. Change management is incredibly difficult and disruptive to an organization, but we know what we need to do. And so that storytelling and that convincing of everybody of where we're going strategically, that makes the rescheduling noise, if you will, within the company, it's hard to even hear it, because everybody would love to see it. Everybody, I think, has expectations that it's coming. But as we've seen with the performance of the sector, we've never been closer to it. And look at how the sector's trading. So to me, it's putting the wins on the board internally for the metrics that we know will make a better business. But Jesse, maybe we have talked about the TAM, the expansion, but I think that's something that not a lot of people have talked about, but I do think it's arguably the most important part of rescheduling.
Look, I think that the rescheduling and everything that will happen as these external catalysts, what we have to focus on right now is simplifying so many things that we do as a business to be able to better capitalize on the expansions that will be meaningful moving forward. So when we think about an increase of an addressable market, it's what we've said in the past, and I'm not the only person who says this, right? The indexing of the consumer and the indexing of the segmentation of the products is going to change substantially. Right. So we know that the core consumer that we serve today, we will continue to serve. There's no question. But the new entrance into our industry, as far as consumers, the expansion of that addressable market, will change a lot in complexion. They will over-index into some of these areas of, whether it's the type of products that they're looking for or just who they are as individuals, that will start to change what the percentage of these sort of core consumers that we serve today represent as a piece of the whole. And so with that comes the need for a very different approach in the future with regards to products, brands, stories and narratives around that, retail shopping experiences, education platforms. All of these things have to start to change a bit because you're no longer serving this disproportionately large number of consumers that are coming in, 21 to 34-year-old male who are buying flower, right? Like that, they are going to continue to exist, right? Like that is a core consumer for us that will continue to refresh, but the percentage that they will make up of the overall consumer base that we serve will change. And so I think the best way to approach that is to simplify everything that we do. Go from good to great in the areas of the business where we can be incredibly impactful. So making less things, but making the things that we make better, right? That's a huge part of what it means to pour a rock solid foundation as an organization where you can start to build consistency and execution across the country to build these brands and to have a consistent offering, right? You don't need 100 flavors of ingestibles across the country. You need a dozen, and they need to be great, right? Like they need to be amazing. And I think that moving forward is how now you say, great, we're doing a much better job at serving the world that we serve today. As these catalysts happen, we now have more money to invest in education or retail experience or technology or research and development around products. Those additional products can be very specifically tailored, formulated, and ultimately marketed for these new entrants into our industry. To me, that's an incredibly effective way to be efficient right now, as opposed to trying to be everything to everyone.
I totally agree. I feel like it's something that's not even cannabis specific. I don't know if you've ever watched, what is that Gordon Ramsay show where he would go to restaurants and they would have a menu that's 15 pages and they have, Chinese food, but then Indian food and then American food. You really want to focus up your menu, have, some really good, strong offerings and have people know who you are, what you offer, and have those, really hit. And then people want to come back. So I think it's, it's across different industries as well, which is kind of funny. Okay, well, we'll talk a little bit more about the consumer and kind of what they're looking for as well in a little bit. But I did want to kind of talk through markets first, just getting a sense. I know Ohio is on everybody's mind just because we're hypothetically coming up very soon on some opening for adult use there, which is very exciting. What are sort of the key markets for you guys, where you guys focused? I know you trimmed down a little bit, which is great to kind of get that focus in. Where are you guys looking statewide?
Start with Ohio. You mentioned Mackenzie. It's a focus for us for a few reasons. One, we've gone through as many adult use transitions as any other organization, and we've taken a pretty hard look at ourselves, and we've determined what we did well in those transitions and what we didn't do well, and which markets we checked the box as a win and one where we could have had an improvement. And so we're laser focused on being a day one participant in size, right? So we're a level 1 cultivator. We're built out. We've got manufacturing. We've got 5 doors. So we've got what you can have. So we're maxed out in the immediate term. We know what we need to do on the retail side. We know what the staffing level needs to be. We know what the technology needs to be. We know what the inventory balances need to be. And we want to be a day one strong wholesale partner in that state. So to me, Florida gets a lot of airtime in terms of what's coming on the ballot in November. But I think what is coming front and center is Ohio, and it's not a small state. It's not a small market, and we're really excited about it. So to me, that's the number one thing that's in front of us from an execution perspective. That's organic growth for us to capture and do it profitably is Ohio. And to your point, it could be later in June. It could be in August. Either way, we're ready for it. So I think we're balanced, and we've got a great team in terms of the back of house and the retail leadership in that market focused on execution. So that's a big one for us. We've talked about New Jersey before. We have a 3rd door to open up, which we're making significant progress on, which is great. We'd love to have that 3rd door open. Commercially, it's a very strong location, so we're excited about that. Nothing happens in Jersey overnight. No offense to anybody in New Jersey, but there's a lot of hoops you got to jump through. But they're all green lights. We just got to work our way through. And we've done a terrific job. I think Jess has even highlighted it. That's a copy and paste opportunity in terms of the organic growth we've seen on the wholesale business, profitable growth. We're expanding the canopy in New Jersey because we're actually selling everything we have. So that's a great opportunity for us to continue to see margin improvement opportunities and to build a better business that's actually growing organically from a wholesale perspective. So New Jersey is front and center for us. And then we talk about Virginia. We're sort of the axe in Virginia. We're not getting adult use before 2026. We've sort of always been in that position. We didn't think it was coming. We were hopeful that maybe we would get it, but it's a great business. It's under indexed in terms of the number of patients per population. So there's still organic growth opportunities in that market, which we continue to see. And we're a large wholesale provider in that market. So that's a great one for us. And then Pennsylvania, if adult use comes, it will be terrific. We've got, I think, the largest, if not one of the largest cultivation and manufacturing facilities in that state. So we're ready to go. We've seen a dramatic improvement in the quality of product, both flower and concentrate coming out of that facility. So that's a wholesale opportunity for us. That's a clear go-get in 2024. And then when you look into 2025, those states that we just mentioned should continue to be growth opportunities for us. We have 2 more doors in Virginia, I should mention, one that's about to open and one more before the end of the year, which is exciting. We have another door to open in Maryland. We can continue to do a better job on the wholesale side in Maryland. There's no question. We're seeing that. We're putting the pieces in place. So from my perspective, those are the key markets that I think people are aware of and are paying attention to. The one that gets no attention is Delaware.
I know. Poor Delaware.
Delaware. It's a great state. We've got a great position there. We have 3 doors. It's going adult use. We're going to be a participant very early, it looks like, in that program. And that's a 2025 opportunity for us. So we're ready for that. We're a wholesale provider. It always shows up in our margin profiles of top 5. Like, it's a great business for us. And we're well positioned for, I think, on the adult use side, it's going to catch people by surprise in terms of that market opportunity. There's a lot of people that go to the state of Delaware for parts of the year. Yeah, especially for the summer. So we're the only ones that are going to be talking about Delaware, but I don't think it means we shouldn't talk about Delaware, because it is a great state for us. We've got a great team that covers that state, and we're well positioned for it.
Yeah, I think it's a sleeper state, and it's a small state generally, but the market there is pretty large. And you're right, there's also that seasonal kind of aspect where in the summer a lot of people are going there for sure.
Yep. And Mackenzie, the only other thing that I would add to that, to the markets that David mentioned, I think it's always interesting when people take a step back and look at the map for us and where some of these facilities that are scaled are located. We took our medicine, for better or worse, very early on the CapEx side. We built out some really big, really scaled, impressive facilities in a number of markets. And those markets are the ones that are now converting moving forward, right? So I think that as David mentioned, at one point we were planting a lot of flags broadly, right? We were a mile wide and an inch deep. There was a time and a place for that strategy. We're now, what we're doing is we're laser focused on making sure that we are incredibly impactful in all of these markets as they convert. When you look at some of the adult use conversions that were historically like bad moments for many organizations throughout the country, we were very underscaled in those markets with regards to the facilities, the footprint, and ultimately what we were able to do from wholesale participation, brand building, right? If you look at Illinois, a couple of stores, a smaller facility in Garden, right? Arizona, smaller facility. California, we were there, and that ultimately through the acquisition was a fairly small craft grow, and not a really sort of robust footprint there. And you go down the line. New Jersey was really interesting because New Jersey, while we weren't, for some regulatory reasons, fully able to participate in what I would say would be the first wave of wholesale growth, that has now become one of our strongest, if not the strongest, wholesale business that we have in the portfolio. It's become the model for many of the things that we will do moving forward. We've become I would say a tier 1 participant in that wholesale business in New Jersey. And now when you talk about all these other states to come, these are real facilities. These are big scaled footprints that are ready to produce not only for our 4 walls, but to also help in our trade relationships with other multi-state and single state operators and building first and third party brands. I think that's something that gets overlooked in a lot of conversations with us. So that's the one thing that I would point out is Pennsylvania, unbelievable facility footprint, right? We talk about Virginia. Virginia is incredible for us. Ohio, we're ready to go. I think in Delaware, we're going to be in a good position as a sort of a tier 1 participant there. Obviously, New York, there's been a lot of negative news around New York for us because, like many others, we've had to pull back. I mean, honestly, it's been gutting to pull back on what we've had to from a retail presence and an hour point of view because of just the unbelievable market dynamics there with the gray market and illicit market. We were we are and were early incredibly invested into infrastructure. The facility out in Riverhead is a unbelievable asset that is ready to produce and serve for that community at scale to make sure that that state has safe and tested product. So these markets are well set up for us to be a meaningful partner in the supply chain.
Yeah, that's fantastic. And I was going to say the same thing, sort of like if you have a lot of New Jersey locations, that can also possibly help if New York is facing some hurdles, so that totally makes sense. Is there anything you can share in terms of how you're picking locations? Again, maybe for Jersey specifically, you said it was a well-trafficked area. What was sort of the, things do you look at specifically, factors?
Yes. So making sure that we have a facility that the Department of Transportation is comfortable with. I would throw that out there because that's not always an easy thing to do in the state of New Jersey. But it's really, we've learned a lot. We've probably done as much identification, again, outside the state of Florida than anybody in terms of identifying locations for dispensaries. We wanted to make sure we found something that does, number one, it's got ample parking. It's very close to a thoroughfare. We're in the southern region, so we want to be thoughtful that it's not up against our other two locations, one of which is closer to the Philly area, which is in traditional sort of central southern Jersey. So we wanted something that's arguably a bit closer to where there's more commercial activity. And that took a while, frankly, when you sort of put all those requirements on the board to get something that ultimately think we can get across the finish line. That took some time. So we finally did that. And we're doing the same thing in Virginia. Those licenses are geographic. And so we need to be thoughtful about opening those last two doors where we're not cannibalizing our existing stores and finding ways every time we open the door. We do want to expand the market, right? We want to make sure we're reaching more patients that certainly that might be driving 30 plus minutes to go to a facility. We can open up something that expands the TAM and allows people to find something closer to them. So certainly more thought into it than we have historically, just because we've had the time to make sure we get something that we know is commercially viable. And with the eyes, like in Virginia, we want to make sure they're commercially viable in an adult use setting that's going to come in 2026, likely as well.
Yeah, makes sense. Also, I would like to say, I know we're talking about it a little bit in the pre-show, but compliments to your location choice in Bethesda, Maryland. It's right across from the office, so super easy to get to, and also right next to a Papa John's, which is probably not the worst for people who are going, which is awesome. Also interesting from Robert, I didn't know that concentrates are being allowed in Maryland June 1st. It's interesting to see. All right, cool. Well, then I would love to talk through kind of going back to that customer experience. I know you're focusing on this year very much as sort of a changeover year, really tightening up the ship in general. When it comes to customers and everything like that, what's important right now to focus on for giving them that good experience where they can come back kind of in general?
Jesse, you want to take that one? You want to start?
Yeah. So look, I mean, maybe you sort of out yourself at some point. I think I have many times in these interviews as being a consumer, but as a customer, I would say what's important is having great products on the shelf and having a nice experience from a retail point of view. We face challenges on both sides of that equation right now as we try to think about this. One, every state is a little bit different, right? Whether it's regulatory frameworks that dictate what the layouts of these facilities look like or what the experience can ultimately be like. We do the best that we can to try to normalize that so that when you come in, it feels like we want it to feel like a nicer experience almost than it has to be or than it should be, right? Our favorite comments are, I can't believe it's a dispensary, right? That's the best, in my opinion, that's the best compliment that you can get right now, because you don't want it to feel like a dispensary. You want it to feel like a great retail experience, store, consultative, education-focused experience, right? So I think you want somewhere that doesn't feel threatening. You want somewhere that you would feel safe bringing any member of your family and showing them, products on the wall, even in markets where you can't actually have it simulated, right? Even if it's blanks, it's just packaging, it's whatever it is, giving the feel that you are in a very normalized experience. And there's nothing wrong with being in here and buying these products, because by the way, there is nothing wrong with being inside that facility and buying those products. So that is, I think we have to continue to do a better job as an industry of that feeling, right? From a product point of view, like I mentioned earlier, you can't worry about making everything for everyone. Like, be great at the things that you're going to be great at, empower the team to be creative, to try to be innovative, but hone it in and focus, right? And continue to skinny that down so that you're just doing great executions, and then bring in third-party brands in order to really bolster the overall experience that consumers and patients are having when they're coming into the facility. There are unbelievable brands all over this country, right? And the vast majority of them are not ours. We have a small subset of first-party brands that I think are great, produce great products and do a great job, but there are some unbelievable things out there. We have to challenge ourselves to try to put as many of them as possible into the retail experience, so that consumers never have a reason to not come in. Well, they don't carry this, so I have to go here, right? That really should never be the case. So I think it's a challenge. There's supply chain challenges. There are, multi-state relationships. There's always something, but we say this all the time. At its core, if you take the customer or the patient, you put them in the middle of every decision that you make, more often than not, you're going to make the right decision, because we are building these brands and building these experiences for them. So if you continue to put them in the center of that, you're going to make better decisions, right? And I think that's another cultural evolution that's taking place internally right now. And we're really trying to empower our team and our leaders who are close to those experiences to sort of raise their voices and say, this is what needs to be done. These are the things that we're missing. These are the things that we're doing well. And, let's focus in.
Yeah, I think that really ties into what you were saying before with going outside of the typical sort of core consumer or customer and kind of really making sure everybody is available, welcome, and being able to kind of have it all without necessarily having to do it all in terms of producing every single type of form factor and product, which is interesting. Before I turn it over to you, David, just because you mentioned it, do you have a favorite product right now of the moment, Jesse? Just because you said you had something?
Okay, here we go again. So look, I'm a big live resin cart guy. There's just something about those products that just works really well for me. I'm not afraid to try just about anything, right, that we ultimately make or commercialize. I've got some favorite strains for sure across the country. There's some stuff that are coming out of these facilities at this point. David and I were on an email the other day where there was some lab testing that came out of, I think it was Pennsylvania, and the tack on that flower was just, I was joking around. I was like booking a flight, right? Some of the stuff that's coming out of Ohio right now is amazing in preparation for adult use. So look, I'm always going to be a bit on the old school side. Like pre-roll is probably about as good as it gets for me. I don't have to twist one up anymore, and I can just go outside. So that's great. But I think for just overall daily easy usage, some of our strain specific stuff, the live resin carts that we do under the Amber banner, as well as obviously others, all-in-one Amber live rosin. I mean, there's some really, really good stuff out there. Yeah. But I'm always I want to taste it. So I'm always going to be more unflavored live resin, as terpy as possible. And just, you sort of find your strains and your flavor profiles that you fall in love with that work for you, and you stay there.
Yep. Fantastic. All right. Well, then I would love to hear actually, let me throw in a question, and then final question will be sort of around communicating with investors and embracing them as well, because I know they're definitely a part of the equation as well. But quick question from Jane. Thanks, Jane. Did you find with changing the company name at all and rebranding that created any setbacks while it was transitioning? What was sort of the thought there?
So that's never a perfect exercise, right? Like, I mean, you can look back in the history of almost every rebranding or renaming, and it is like littered with landmines, right? For us, we knew going into it, there were going to be some potential setbacks, right? Like, first of all, it's literally the word cannabis with a T at the end. So from a ramping into digital audiences and SEO and stuff like that, we knew we were going to pay the piper for the first 12 to 18 months until you start to index and register enough authority and influence inside of the naming convention where the returns are yours and yours alone, which, by the way, once you get there, that's killer, because now the flip side happens, right? So instead of people searching for cannabis and them auto-correcting to cannabis, now people search for cannabis and it autocorrects to cannabis, and many times, depending on the proximity and the location where they are inside of the geotag. So that was obviously one that was always going to be a potential setback. We were okay taking that medicine because at the end of the day, we still believe, and we know overwhelmingly from the customer base, the data that we have, most of those shoppers are proximity based, and they're not necessarily searching on geo for directions to. So that's more of a tourism thing. In most of the communities that we serve, outside of a few where obviously they're in fairly tourist dense areas, those are almost neighborhood shops where you have a lot of reoccurring, very high LTVs for the customers. So the most important thing for us was, let's put a brand and a name that the company loves. Like, it's always great to do things externally. I literally just said, put the consumer in the middle of everything, and now I'm breaking it, right? For this one, we were coming out of a chapter where we were Columbia Care, which was the right name, the right brand, the right everything for the time that it existed. But we had evolved and things had changed, and we're now serving more adult use. We're serving more consumers than patients than ever. And the people inside of our company are unapologetically passionate about what they do, what they sell, what they serve. So we wanted to give them something that we felt resonated with them. And so we almost had a bit of a cheat code, because we had done the retail rebrand and we sat back and watched, and the swag orders, working
Who's
from
got the
home.
dog? What dog? What kind of dog? Oh, I got to know.
That one, well, there's a couple of them in there, but that one is a big hound dog. So, the reality is, the swag orders, the everything internally, people went nuts over cannabis. So that is overwhelmingly, it was like almost like a cheat code. We knew that people loved it. We knew that they wanted it. And so we went that direction. And I'll go on mute now so that I can yell at the
No, you're all good. And that's a good way to kind of mark that new chapter and that growth, that change. So I think that's important too as well. Okay, so then on the other side of the customer, consumer, just sort of as we're sort of at this stage in the game, what's an important thing that you guys want to make sure that the investors, or that you can communicate to the investors kind of currently, as we're kind of heading in almost halfway through 2024? I'll pass that to you, David.
Sure. So, we've talked to a ton of stakeholders since January, many of them multiple times. And we internalized what we heard, which was, you've got a large asset base, larger than most people realize. You've got a lot of revenue to start with. What does your business look like if you look at it through the lens of building a better business, right? And so ultimately what a better business translates into is a higher margin profile business that generates more cash. So it's not just a higher margin, it's a higher absolute profitability business, right? And so that's the definition. That is a good chunk of the definition of building a better business, which is having improved profitability and cash flow generation. And so if you think of us again in the phase 3 of, we know we have more information now than we ever have in terms of the outlook on a market by market basis, facility by facility basis, the art of the possible, and what the next 2 or 3 years looks like. We know how to build the better business. And ultimately that translates into free cash flow, right? So that is what we've heard loud and clear from investors and from other stakeholders. And that's what we're laser focused on. And so that doesn't happen overnight, given the size of our business, but the green shoots we saw in Q1 will continue to see throughout the year, and the strategic changes we're making to the business. Ultimately, that's where we're going, because we've heard it from investors. We know how we comp to tier 1s and tier 2s from a gross margin perspective, an EBITDA margin perspective, and cash flow generation. Those all need to change. Like, it's very crystal clear. And I'm just thankful that we're starting with a business that's large enough and has the organic growth opportunities associated with the markets that we talked about, and making the fundamental changes across the board, including cost reductions, to get there. So to me, that's what we've heard from investors repeatedly. And we're going to continue to focus on delivering those, which I just highlighted, doesn't happen in one quarter. It takes a few quarters to get there. But that is, if there's one thing we repeat internally, it's, this is where we're going and why. That's a large chunk of what a quote unquote better business is.
Yeah. So to the investors, you say, we hear you, and we're implementing those changes that, that they want ultimately, which is great. Fantastic. All right. Well, I feel like we've covered a ton in the short time, but appreciate you guys both taking the time. Any final thoughts before we wrap up?
I just thank you for having us on. This has been terrific. So looking forward to doing this again in the future. Of
course. Anytime. All right. Well, thanks so much. Enjoy the rest of your afternoon. Thanks everyone for being on. Really, really appreciate it. And we will catch you tomorrow. Thanks again.
Thanks, guys.
Before investing, carefully consider the investment objectives, risks, charges, and expenses found in the prospectus, available at advisorshares.com.